that have been saying that things are better. And so I happen to, I say own Apple, don't trade it. Now, David, did you see the UBS Evidence Lab piece on advertising? Slower growth ahead.
But first, let's get in these opening bells here, Jim, because we are going to, we'll get them in 3, 2, 1. There we go. There's a real-time exchange back at our headquarters. You know, things change, obviously, when we heard from the ECB. A 50 basis point move up, getting them to zero, essentially. But nonetheless, first time they've raised in 11 years, doing the honors here, a training program connecting young adults with top companies. Over at the NASDAQ, BlackRock celebrating the launch of new model portfolios to provide better long-term investments.
Maybe we have some sound from my interview with Larry Fink last night. He is someone who has thought.
You know who we do have sounds from? Is John Stankey, and I think let's start off from macro. Let's work our way to AT&T.
He was a fantastic. Was he a cashier, Stankey?
The consumer, because we were talking about it in regards to the health of demand for Tesla. We were talking about it in a number of different areas. AT&T, stock of which is down almost 8%.
What can I say?
Reported a number in terms of free cash flow that was less than expected. It reduced its free cash flow estimates for the year from what had been $16 billion to $14 billion. It expects to deliver roughly $10 billion in free cash flow in the second half of 2022. The reasons that at least the CFO cited to me when I spoke to him at 7:45 this morning were working capital issues, Jim.
Jeez,
higher device payments. All right, they've been making a lot of higher. Now they said that's a high-class problem because, of course, they've been selling a lot of iPhones.
Not a high-class problem. You can't get people to pay on time.
And they said things are probably a couple of days longer
that means
to collect
there's a mismatch
on receivables. They also said the consumer is delinquencies are ticking up from pre-pandemic levels, but there is no doubt that the performance in the quarter in terms of sub ads was quite good. Over 800,000 subs. But the market is reacting to what you've always said is certainly an important point, which is how much cash you're generating.
Right. I mean, that's what Phil Angelakis, the fabulous CFO.
Mike Angelakis.
I'm sorry, Mike Angelakis. What Mike told me once when I
was the CFO of Comcast. He's actually a board member of ExxonMobil.
That's true. And ExxonMobil got a nice recommendation. But Mike once told me in a talk that I gave, I summed up what I look at in a company. And he said, I look at free cash flow, and I look for profitable growth. And that was it. I had just been a gas bag talking about all these things. I love him, okay? And one thing that AT&T failed today is
the cash test.
Mike's view of things.
And that has to be why the stock is down. Yes. By the way, it had been until today one of the better performers out there. In fact, it had been up as much as 10% when I looked at it yesterday. It is now, with this fall, back to almost flat for the year.
Yeah.
Obviously, we are now past
and how about
the spin of...
We're doing a Zaz watch, too. You're going to go Zaz?
Warner Brothers Discovery. I'm not going to go to Zaz. You know, AT&T shareholders, certainly some of them still own a good amount of Warner Brothers Discovery. That has not performed well either. But I do want to go to the broader economy. Yes. John Stankey was a guest on Squawk Box this morning. And here's what he had to say on the consumer.
There's clearly some dynamics going on in the economy where we have customers that are stretching out their payments a bit. We expect that they're going to continue to pay their bills, but they're taking longer to do it. That's not atypical in an economic cycle, and we're starting to see maybe the bottom end of the subscriber base making some decisions between, you know, am I paying this bill this month or that bill this month, given some of the pressures they're seeing at home.
It's interesting, though. I mean, there is, you know, a bit of a slowdown, but again, there's this question of the consumer, and he said the lower end.
Right.
And because I continue to hear that, but not the middle, certainly not the high. And you're seeing companies react very quickly with their decision to cut operating expenses, but not capital expenditures.
Not capital, but I do think that, Kim, the oddity here is that we have more than full employment, and people are already stretching their bills. And they're probably therefore doing it for autos, too.
There's no doubt that inflation is having a significant impact.
Yes,
not just here, but around the world. You saw that 8% inflation number out of Europe, 9.4% in the UK.
Enterprise doing better right now.
It's worldwide, and it's a problem.
Well, that's why I want to follow these two. All the cruise ships have to raise capital, like AT&T, like Carnival. I mean, there are many cross currents here. But the one thing I'd point out, David, is that a lot of companies that have fantastic businesses like Danaher, China Point Travel Trust, just killing it. You have a fabulous business with great growth, of which there are many. It's been a terrific time.
It has. Another person who was on Squawk Box this morning, yes, we used their interviews because they have some good ones, was John Gray, the president of Blackstone.
I thought he told a great story,
He
but the
usually
market
does.
disagrees with me.
My friend John, who breaks my heart every time by going on that show and never ours, stock is down about 5%, but Blackstone also has a pretty broad-ranging view of the economy, given all the portfolio companies that they're seeing the P&Ls on. This is what he had to say when asked about sort of what are they seeing when it comes to this idea of a slowdown.
We're seeing some slowdowns on the ground in shipping volumes in our ports. We're seeing it in online advertising. We're seeing it in furniture. We're seeing a range of areas where there's a deceleration.
Yeah,
He mentioned advertising, and obviously that oftentimes is a decision that companies will make because it's easy to say, you know what, let's hold off for the third quarter or the fourth quarter right now.
But his housing story was still pretty positive.
Yes.
And his broad portfolio of things working out quite well. I felt that we could easily seize the negative there, but the positives, I think, overrode.
You did.
The negative. Yes, I really did.
I've mentioned their B-REIT product a great deal. The Blackstone REIT becoming one of the largest out there, taking in what had been as much as $3 billion a month. Now, it's flat. They're not getting it. In fact, what a report out yesterday said, incoming versus outgoing is basically they're not taking in any money. That's an interesting data point.
Very.
John was not asked about it there, but I am referring to a research report that was out yesterday that estimated, based on this analyst estimates, that it's, redemptions are equaling inflows at the B-REIT, Jim. What did you take away last night from BlackRock and Larry Fink in terms of
level of
economy or anything else?
A level of optimism.
Really?
That supply chain problems are already easing. That inflation, while not transitory, obviously, is going to be defeated by the Fed. You got to give it some time. That the areas of the economy that have overheated will have individual issues, and he's most concerned about famine, food shortage, food security. Now, this is a very practical man, and that should be. We know that that's been the single biggest source of revolution in the history of our world.
Yes.
And he's quite concerned about that. He actually brought up the notion of fertilizer being too expensive. There is a fertilizer cycle. The stocks sell at 4 times
also,
earnings.
there hasn't there been some issues because of Ukraine, because of certain things that come out of there that are used in the making of
very
fertilizer?
much so, and there's also a natural gas component. But he's an optimist.
Yeah.
And he also, we really went over a lot about climate change and how I think people are not understanding when he says he's focused on climate change. Obviously, he's a believer in climate change.
Well, very few people now.
Right, but he's focused on the idea about the business risk of it.
Yeah.
And that people have to recognize that it just happens to be one of those important risks, in the same way that we should be thinking about the consumer being weaker. I mean, it's that elevated for him.
Let's take a listen to Larry Fink from last night's Mad Money, I think, speaking more broadly about the economy.
But the reality is we've seen this. The inflation is going to be fixed over time. We're already seeing commodity prices crashing from the high.
Right. No one talks about that. And supply chain's gotten better.
Supply chains in a lot of the industry is getting better right now. And the Federal Reserve is tightening, and that is going to, the Federal Reserve's tool is to tighten, and through tightening they limit demand. So is there a risk of a recession? Sure.
But we're not in one yet.
No, but even if we're in one, it's going to be quite mild.
That's huge.
No, and that's somewhat optimistic. I'm picking that up as well to a certain extent from people who have broad sort of visibility into a lot of businesses. I talked to one, let's call him an Uber banker this morning, saying, I see a slowdown, but not a recession.
Right.
The low-end consumers hurt, but companies' ability to cut operating expenses quickly, to adjust quickly, and also some signs of improvement already. Companies are moving very fast.
Well, I mean, I think that we have to get rid of of this narrative that when an Alphabet decides to slow hiring, that somehow that's bad. I mean, that's prudent.
Right.
A lot of companies doing Microsoft being prudent. They're just saying, listen, we read the papers. It could happen. But we're seeing a men from boys. You know, it's a wheat chaff. I guess we should never use the. You know, but you look at Cliffs, Cleveland Cliffs versus Nucor. Now Nucor reported today, and Nucor does pre-announce, but Nucor, NUE, when you think about it, a lot of their grades of plain vanilla steel are not doing well, but they're proprietary steel. So look at how well that's doing.
Yeah.
That tends to put. You don't have a serious recession and have Nucor stock up $6.
Interesting. Jim, the highlight of the morning, though, is, as we started off here, the AT&T
Tesla?
numbers. No, because it's also pressuring Verizon. So you're talking about
Which
a lot of
reports
market cap
tomorrow.
starting to add up here. And T-Mobile. T-Mobile shares, I think we can put all three up or down, almost 5%. Verizon is down
I still like T-Mobile.
almost
Mike
4%.
Sievert's doing very
AT&T
good.
has been down as much as over 10% in the session. Again, this not on the subscriber metrics, which seem to be fairly strong from AT&T, but the concern perhaps about delinquencies growing, strength of the consumer, and/or the lack of free cash flow generation at AT&T. But it's bleeding over into the
Do you
the other
think there's
big
any
players.
chance? I mean, you notice oil's down again. By the way,
There's
Exxon.
Verizon, and we
Exxon's
have,
just getting
and T-Mobile
plugged.
as well.
But Verizon's really breaking down here. I don't know if they have the horses to deliver a good quarter.
Verizon.
Yeah, I don't know.
Yeah.
What do you think?
I don't know.
Are you going to interview Hans?
No, I
Vestberg?
have not interviewed Hans in quite some time. He finds other places.
Jeez.
But I'd love to have him back on the show.
You know, Eddie
Always
Stanky.
welcome to have
Eddie
him.
Stanky played for the Brooklyn Dodgers, the Braves, the Giants, St. Louis Cardinals. Was born in Philadelphia, near me.
Yes,
It's Eddie Stanky that you want to bet on here.
not John
He's an
Stanky.
amazing player. People forget.
Well, you've also said you want to bet on Elon Musk, and Tesla shares are continuing to climb.
well, that makes
Still
a ton
down
of sense.
26% for the year, but I would note the market value of the company is now once again above $800 billion.
Incredible.
And coming off what you termed to be a very good quarter and a great conference call.
I just think that sometimes when you listen to him, he's mellifluous to begin with, but he has a command of what people want. You know, you think about it. He understands what they want in Europe, in China. He will not produce the pickup until it's absolutely perfect. In the meantime, here's Jim Farley committing to 600, the CEO of Ford,
Yes.
600,000 new cars, working with a very good battery company. And you know what? People just say they yawn. They yawn at Ford
Why is that?
because they have ICE, internal combustion engines. And
Right.
people just say, you know, as long as you have ICE, we're staying away because that's a bleeding asset. People don't think that Farley can make the transition from being, and no one has correctly. But the one thing I would say, you can't, they're sold through. The Ford product is very popular.
Yeah. Mixed picture in the broader markets right now, Jim. The S&P down a bit. Obviously, we came off the lows in the pre-market as a result of that
I
move
think
by the
it's- I think
ECB.
the
It would
market's
seem.
fine.
And the Nasdaq building on sort of what was some strength.
I think the NASDAQ
recently.
leadership here and the bank leadership are both good. I need to see a turnaround in more than just the semis.
Right.
I don't like the Apple run because I just don't think that I want things that are sustainable, but I do like obviously I mentioned I like the discounted cash flow model for a subscriber. But David, I think that Alphabet is the key stock here.
You do? Key to this market
Because,
is Alphabet?
yes, because they have an advertising model that is second to none.
Right.
People really understand the return on investment on a Google ad is probably the highest
Yes.
of anything. If they get, but of course, the Senate's investigating them for that. But if that stock, in the face of all of these, be careful of the ad model companies, does well, and Snap does not get crushed tonight, I think you'll see a return to the advertising stocks. So that's what I want to watch. And of course, we're watching oil just roll over again. Seems to be repelled at the 100 level every time,
It
as if
does.
it's just the 100 level's a castle and the moat is just too great.
Jim, I did want to come back to a name that we used to mention with some frequency, but haven't in a while, because I do notice
Abbott?
it up. No, Thermo Fisher. First of all, when you talk Thermo Fisher, you got to put up the 10 or 20-year chart because of long-term value creation.
Mark
Stock's
Casper's
up over
very
6%
good.
this
Mark
morning.
Casper's very good.
I'm not seeing
Why it's up?
news. I may have missed it.
No, it's Danaher. Danaher's leading this market.
Ah, thank you.
Now, Danaher.
So there's
I mean,
Thermo Fisher. and
Thermo
there's the
Fisher.
chart we
This is
love
on
to
the
put up.
coattails of
Look at that.
Danaher.
1,000% over 10 years.
Well, that's Mark Casper doing an amazing job. a lot of people feel that this was just the GE business just going.
And there's Danaher.
Well,
Thank you, Jim.
Danaher took the GE business that was the fast healthcare,
Right.
and it's doing well. And a lot of people felt that they were going to get clobbered because of Chinese weakness. It did not happen. And Thermo Fisher and Danaher are life science companies. They make the tools. A lot of people also felt that maybe Danaher would be hurt because there's not a lot of biotech companies coming public.
Yep.
And they need Danaher's tools. And Danaher also had COVID tools that people thought would slow down, a la Abbott, which everyone has turned on. So Danaher, and now,
So the
of course,
positive reception of Danaher's earnings is obviously also
yeah, and that
having a
is
very
one of my
positive
largest,
impact on
it's one of my
Thermo.
largest positions for my trust,
It is.
has been for ages, because you know who runs Danaher.
They're Rails brothers, right? They're
And you know what? They seek no recognition.
none. Never. I've never spoken to a Rails brother.
that incredible?
I don't even know how many there are.
And Casper,
Do you?
Thermo, how many rails? I don't know.
Casper, we've talked to. He's a
But
bit
no,
of
Mark
guest on.
Casper
Yeah.
was the first to come on to say, listen,
Yeah.
we're going to be able to test and beat using the equivalent of PCR machines on this. I mean, one of the things, and I'm a little upset about Senator Warren's comments today, but American business did more to stop this COVID plague than anyone. And it's Danaher, it's of course, unfortunately, Hologic, which has been going down of late, but Pfizer. I mean, how do you criticize Pfizer here for what they did?
I don't know.
And I still be hoping that the Chinese.
I know you
By
were.
the way, Jim Fitterling is saying that for the CEO of Dow was
Yes.
on Mad tonight. He is saying that China's letting up.
They are starting.
But
to
have you
release.
heard about the tanks and banks narrative?
I haven't.
Okay, there's video about tanks being in front of banks, and the
Yes.
government in some places has said, your checking account, we're turning that into an investment account.
Right.
Now, isn't that extraordinary? And it happened. What happened? I got to go faster? What did you do?
I'm wrapping you.
But what do you do this
Because I got to
for?
get to Bob.
What kind of thing is this?
Well, I can't get you to stop talking otherwise. Bob, help me out here. Oh my God, look at that pink tie. So beautiful.
I'll sit and listen to you and Jim all day long, guys. Let me just point out, the futures went up when the ECB hiked rates. Dollar went up and the futures went up, and that's completely reversed as we opened. The important thing is, once again, energy and healthcare are weighing on the market. United Health down again for a second day, really a problem for the Dow. Just take a look, though, at the growthier parts of the market, which are holding up better. We're getting a little renaissance in some of these growth stocks. So semiconductors still up, consumer discretionary. Tech was up earlier on. It's flattish now. And energy just keeps getting clobbered here. So, again, picking on the growth sectors. Just take a look at the travel in the sort of yikes category. Remember, we had Carnival closed at 11:09 yesterday, and then they announced that $1 billion stock sale at 9.95. Yikes! So that's a significant dilution out there. And of course, people are worried. Is this a sign of some problem or slowdown in the industry? They're sort of taking it rather hard in the other parts of the business. Probably they'll use it to pay off some debt in 2023, but it doesn't send a great signal right now for that big rally we had in those travel stocks. Elsewhere, though, this inflation worry has been replaced as the #1 issue by the demand question. So what side of the demand issue are you on here? Horton came out yesterday. You saw these home building stocks down 30% on the year. But, here's the man in charge. In June, we began to see a moderation in housing demand as mortgage interest rates increased substantially and inflationary pressures remain elevated. And, of course, they took down their full-year guidance. He thinks this is going to persist for some time. And if you look at D.R. Horton, though, I mean, these stocks have gotten killed and down another 2% again today, but we're down, 28% for the year. So the market's already priced in a lot of this overall. So what you see here, if you just take a look at where the markets are going here, we keep waiting for an earnings apocalypse. That hasn't happened. It's been a month. The market was freaked out about an imminent drop in earnings, and it hasn't happened. So today, this is what matters, Q3 and Q4. We're still 10% growth today. July 1st, it was 11%. All right, it's down, but it's not down dramatically. They're not slashing the numbers. Q4, we still got 10%. It was 10.6% on July 1st.
280, 122.80 certainly is my target here.
Direction, and that is to the upside. So
Look at the link that Clifton has. We run it till the 27th of this month. Couldn't be pleased. We'll put it at 765. I think we're going to see a little bit lower to start and then maybe a move higher here. And then AMAT 104, AMAT long 104. Again, these are just thought starters, stocks that I've looked at this morning that have gapped up and looking pretty good. This SIDU, interesting enough here. You go on the daily here, and SIDU's got a lot of room to run towards that $5 mark. I usually don't mess around with these stocks that are sub $10, but looks really, really good this morning. We'll put it over $4.50. This is SIDU long over $4.50. It's got to come down a little bit for us to get interested in it. And then, of course, NVDA. NVDA is looking great this morning. Again, 178, probably 179 this morning as we get the day started. Hey, there he is. I was just saying, I don't know if he was going to be back today, but there he is. Shirt on, and he's on the ship. Great to see you, my friend. Good. Yep, good to see you, Mayor. We are ready for this market today. Absolutely. About 5 seconds to go. Mayor, do you want the charts today, or you want to try it? Okay. No problem. All right, traders, market is open. We are ready to roll. Again, watch the market split.
So at the time, I was just, I really wanted to do a comedy, and I kept telling my agency something like Parks and Rec, something like Parks and Rec. I want something like Parks and Rec. And then when pilot season came, which is this, I don't know if you guys know anything about TV, but it's basically like January, February is when they're casting all the new shows in television. And it's kind of shifted a little bit, like some of the auditions happen earlier or later. Around November, I got an audition for actually the part of Amy Santiago, because in the script, she was Latina. She is Latina. And I went in to read for that, and the casting director, Allison Jones, who's cast a bunch of stuff, one of my favorites, Freaks and Geeks, she cast Parks and Rec. She's really great. I went in to read for her, and she was like, all right, I want you to come back for this role, but also this other role, Megan. I was like, cool. And Megan was what Rosa turned into, tough, smart, scary as hell. I had an audition for her. I really loved the character. I wore all black. I wore my black leather jacket. I wore my black boots. And then I got a call back for both. And then I got a screen test for both. And at the screen test, I did the Amy role first. And I was really nervous because I had like one other screen test before. And then when I got there, they were like, by the way, you're gonna be improvising with Andy Samberg. He's here. And I was like,
no pressure at all. No pressure at all.
yeah, and I'm like a fan from Lonely Island. Like, I really love them. I think he's just one of the most brilliant comedians there is. I think he was like born to make everyone laugh. I think that's his, like, the thing that he's supposed to do on this earth. And so that, I don't think that screen test went very well. I was really nervous. I also think that role was always supposed to be Melissa's. It was always supposed to be Melissa Fumero's role, and it's just so lucky. lucky that I got to read for it because then I got to read for this other role of Megan. And that screen test was the next day. It went really well. I was really comfortable. I was more comfortable in that character. And then I got cast, and it was really an incredible. And Melissa got cast before me. And I read that she had been cast, and I was like, I cried because I thought, I'm so happy for her, but I also know that there's no way that a network is going to cast 2 Latinas. It doesn't happen. There's only one of us ever, you know? And then like 2 days later, my agents were like, guess what? It was amazing.
Really good news.
Yes, really good news.
Laptops and cameras.
Sorry. There are many amazing ensemble comedies out there, but Brooklyn Nine
I got a good one. Dow, which measures the economy. Tractor Supply, which I always love. They talk about the people who now have moved out, right, to the country. And then Inon Crisis, his turnaround Mattel. He's done a great job. Speaking of turnaround, Russell Weiner, Domino's Pizza, bad number, then good number, stocks up. This was exciting.
This was great. Let's do it again soon.
Yes, and less stream of consciousness.
See you over there on Mad Money tonight. Right over there.
I love my set so much. Thank you, everyone.
You're welcome. All right, market off its lows. Keep it here.
Squawk on the Street. Rick Santelli here live at CME HQ with breaking news. Our June read on leading economic indicators, expecting a number down around 0.5%. It's a bit of a miss, down 0.8%, which means we now, and last month goes from -0.4 to -0.6. That's 4 negative months in a row. The last time we did that was the end of 2015, beginning of 2016. And what's more, -0.8 is the worst number going back to COVID in April of 2020 when we were -5.3. All the data's been crummy this morning. Jobless claims at an 8-month high, leading economic indicators, and Philly Fed, which was the lowest level in 26 months. That's why interest rates are lower across the board. David Faber, back to you.
Okay, thank you, Rick Santelli. And good Thursday morning to everybody. Welcome to another hour of Squawk on the Street. I am David Faber. That is Sarah Eisen. We're live from Post 9 at the New York Stock Exchange. Carl has the morning off, and Morgan is on maternity leave. Let's give you a quick look at markets. Half hour into trading, you can see we are up across the board.
Despite some of the negative data out there that Rick just mentioned, we're 30 minutes here into the trading session. Here are 3 big movers we are watching at this hour. Carnival, take a look, getting crushed, announcing a $1 billion common stock offering, saying it will use the proceeds for general corporate purposes, including potentially to settle debt that matures in 2023. The stock down 12%. It's seen a nice rally in the last few weeks, evaporating today. Plus, look at Alcoa rallying, posting better than expected second quarter profits and revenue as sales rose faster than costs, I should say. The company also announcing a $500 million share repurchase program. And SAP sinking lower despite topping revenue estimates, but trimming its 2022 profit outlook. Later today, we've got an exclusive interview with CEO Christian Klein on Closing Bell, 3 p.m. Eastern. David, it's a good time to have one of Europe's biggest software makers with the ECB moving, the Euro's on the move, and there are questions about whether Europe is really heading into a hard landing sooner because of this energy crisis. So I'm looking forward to that. We should turn to Tesla, though, because stock of the day moving higher after topping Q2 estimates on profits despite shrinking profit margins from higher costs and supply chain disruption. CEO Elon Musk joining the call last night, weighing in on some of the issues, including inflation. Listen.
I think inflation will decline towards the end of this year. We're certainly seeing prices of commodities trending lower. But take it with a grain of salt. This is making economic prognostication is fraught with error.
Joining us now is Cowen's Jeffrey Osborne. He's got a hold rating on Tesla. Jeffrey, why is the stock up today? Is my first question. Given the numbers were okay, and now the 2022 targets look harder to reach.
Yeah, thanks for having me on, Sarah. They definitely did beat the quarter. Gross margins weren't as worse as feared, so that was nice to see. Would say it was a bit of a low-quality beat on EPS. I think that the EPS headline is really the reason why it's up today, but also just the reaffirmation of 50% growth. We were looking for more them to guide that down, so they were very bullish on the demand side. Certainly, a lot of the Q&A was on that, but I think a combination of ramping factories as well as reaffirmation of strong demand is the rationale for the stock being up a couple points today.
I get why it's good for the bulls to hear that 50% growth reaffirmation, but isn't China the key to the story and very unpredictable here with the COVID lockdowns?
Absolutely. A couple keys to the story in our mind. China is a big one. That's their most profitable plant. And you saw just the big sequential decline from Q1 to Q2 as China was shut down for a couple weeks. But also, they've got 2 new factories ramping up, both in Texas as well as in Berlin. And key to the story is really ramping those up, as well as a new battery that they have, which will really drive down costs and expand margins even further, hopefully in the coming years.
You called it a low-quality EPS number. I'm curious as to why.
Yeah, a couple of things, David. One is both OPEX, in particular R&D, was down over 20% sequentially. That's a bit unusual for a tech-oriented company. Tax rate was much lower. And then you also had the very bizarre move on Bitcoin, right? So Elon was saying he wasn't going to be selling Bitcoin. They sold over 75% of their holdings. And so most of the street, including ourselves, had a pretty sizable $400+ million charge for that. And it ended up coming in just over 100 million. So about 300 million of net income upside was really from just the change in mind, if you will, of Elon on something he said he wouldn't sell.
Yeah, but on the bigger picture, Jeffrey, just in terms of demand for these vehicles, not necessarily their ability to make them as quickly as they need to, is there any change in your opinion, or is demand still very strong?
Demand is very strong right now, but quite frankly, David, it's very strong for all EVs. If any EV you're trying to buy, you're going to be waiting multiple quarters to get. You see that with Rivian, GM with the Blazer coming out this week. There's a very strong demand, Ford, et cetera. The competitive environment certainly intensifying, and it's the secular shift that's playing out. You know, our fear with Tesla is that they've raised prices so much, and the portfolio, the Y and the 3 in particular, are getting a bit long in the tooth. The stock tends to work when margins are going up and there's something new to get excited about. And unfortunately for next year, it really all relies on the Cybertruck, which is already several years late.
Well, on that price issue, the average selling prices were up nicely, and that has been helpful for companies in this inflationary environment. But Elon on the call said that the prices of the cars were getting to embarrassingly high levels and that he'd like to actually lower them. Do you take him at his word? And does that actually hurt the bull case?
Look, a big piece of the strength this quarter was from the higher prices. And I think, remember, a car ordered today will typically be revenue 6 months in the future. So there's a strong case to be made that Q3 and Q4 will also have strong pricing trends. But I think key for the margins to be maintained and really for them to drive to the sweet spot of demand and that proverbial sort of $35,000 to $45,000 price point, they need to get this new battery right. The biggest piece of cost they have is batteries, and so this 4680 cell that seems to be having some teething pains and growing issues, that's the really key to the long-term story in our minds, Sarah.
Jeffrey, thank you for joining us. 733 price target, which actually is lower than right now on Tesla. Appreciate it. From Cowen.
We're also keeping an eye on airlines this morning. In fact, many of them, as you see right there, are under significant pressure. That is their shares. Phil LeBeau has more for us. Phil.
David, a familiar story. You have a couple of airlines report a profitable quarter for the first time without payroll support since before the pandemic. Record quarterly revenue. You know what the investor says? Who cares? We're not crazy about what we're seeing in terms of the setup for the airlines right now, in part because they have brought down their capacity due to the issues that they've had with cancellations and delays. There you see the impact on American. Take a look at its capacity. Much like its competitors, it brought down capacity in June following the issues in Memorial Day. They also had some weather delays that impacted things, but they were down 8.5% in the second quarter. The guidance for the third quarter is a reduction of 8 to 10% for the full year. All of this compared to 2019, down 7.5 to 9.5%. Here's CEO Robert Isom on the long trail ahead of them in terms of bringing back capacity.
We have some time to work this through. Look, we're coming back from a global pandemic, and there's so much to do to get back to where we were. I feel really confident, though, about the steps that we're making, and I know that we're going to get back on track.
Here is the other issue impacting the airlines, especially those with flights, transatlantic flights. It's a mess in Europe. Heathrow in particular is an absolute disaster right now. I was told by somebody that they've got about 14,000 job openings there. That's one factor behind the delays, the cancellations. We talked with Scott Kirby from United Airlines last night, and he expressed the frustration that they have because they believe a lot of this is due to the airports in Europe.
That's the reason that we're cutting capacity for the balance of the year. We're essentially going to keep flying the same amount that we are today, which is less than we intended to, but not grow the airline until we can see evidence that the whole system can support it.
And as you take a look at shares of United, American, and Delta, keep in mind, while they may have issues with the airports over there, there are also some crew challenges that they're facing. People who have been bumped from flights because the crews are just not there. Bottom line is it's going to make people perhaps think twice about booking a transatlantic trip. Those are lucrative flights for the airlines. They do not want to see that business fall off. For now, they still have enough of it going across the Atlantic. But you have to wonder how many people see these lines and rethink their plans. Quickly, don't forget that we have Ben Menicucci, CEO of Alaska Airlines. They also reported earnings this morning. Like everyone else, record Q2 revenue, David. We'll talk with Ben during the exchange. Back to you.
Look forward to that, Phil. Thank you, Phil LeBeau. I want to move on to a takeover story this morning. Amazon is acquiring primary health care provider One Medical. It's $18 a share. all-cash deal, and obviously it's had a very positive impact on the stock that was right around the $10 level prior to unveiling this significant premium to that stock price, Sarah. But what's more interesting, because obviously the size of it is not, is simply the idea of yet another foray by Amazon into another part of the healthcare system, and whether or not this time they actually will disrupt something. The quote from Neil Lindsay, the SVP of what they call Amazon Health Services, is, "We think healthcare is high on the list of experiences that need reinvention." But they've tried with pharmacy benefit managers to some extent. Not much happened. We thought maybe with the insurers, they haven't really gone there. The drug distributors, they bought PillPack, haven't seen a lot of progress there. They're running the business. And so there are many questions as to whether now they're focused on primary care experience and whether they really will make inroads.
And of course, there's the Amazon effect with Teladoc shares plunging, even though it's not really a direct competitor to Teladoc. They do digital services, but it's really concierge medicine. The people I know who belong, they pay a fee for the year, and then they have access to free COVID tests, rapid tests, and doctors and that sort of thing. But to your point, they tried with Whole Foods, too, to disrupt the grocery business, and that still hasn't happened yet, really. I mean, remember Kroger shares when that deal was announced? They plunged. That would be an epic buying opportunity. So always interesting to see the Amazon ripple effect, and Teladoc is off the lows.
Yeah, and their continued ambitions to try to move into other areas. And don't forget, of course, remember that joint venture between J.P. Morgan and Warren Buffett and Amazon called Haven that was going to re-engineer healthcare, that then unceremoniously disbanded a few years later.
It was a try. I think the premium is interesting, too, on the deal. What, 70-80% premium? That's for this kind of market. That's pretty, I don't know, is that bullish?
Yeah, yeah. I mean, you do see it, particularly on the smaller deals, and when there is a strategic imperative from the buyer. There was potentially an auction here. Don't really know much about the background at this point, though. About a $3.9 billion deal.
It's too small for you.
It is.
Peanuts.
It is. As we head to a quick break, though, here's a look at our roadmap for the rest of the hour. It includes a first on CNBC interview with Philip Morris International. We'll break down that company's latest earnings, and we'll maybe talk about the FDA crackdown on Juul E, which they have nothing to do with cigarettes.
Plus, the ECB raising interest rates for the first time today in 11 years. We will discuss. The euro is all over the place, gave up some gains. And another big earnings interview this hour, we'll speak to Union Pacific on how they're navigating rising fuel prices and ongoing port problems. More Squawk on the Street straight ahead. Dow is down now, 220.